So, if you've been investing in Nigerian stocks for any length of time, you almost certainly know the main exchange, right? You check the all-share index, you track your favorite banking stocks, you watch the gainers and losers every single day. But did you know there's actually an entire second official Nigerian stock market operating right alongside it? Yeah, one that most investors have literally never even explored. It's called the NASD OTC Securities Exchange, and it's been operating completely legally under the strict regulation of the SEC since 2013. So today we're going to pull back the curtain on this hidden world.
Okay, let's dive into this. Here's our structured roadmap for today. First, Nigeria's two distinct stock markets. Second, how companies actually get listed. Third, liquidity and price movements. Fourth, transparency and risk profiles. And finally, number 5, figuring out which one fits your strategy.
All right, Section 1, Nigeria's two stock markets. Let's just quickly establish the baseline most of us already know.
So, there's a sheer contrast between these two ecosystems. On the NGX, you've got the heavyweights. This is the main exchange with those formally listed household names. We're talking about the absolute giants: Dangote Cement, Zenith Bank, MTN, GTCO. These are massive, strictly governed companies. But on the NASD OTC, well, you're looking at a completely different set of securities. This is Nigeria's licensed over-the-counter market, built specifically for unquoted public companies. Now, both markets are fully legitimate. Both are SEC regulated, but they serve completely different purposes.
Moving on to Section 2, how companies get listed. Let's look at the actual gateway for businesses entering these respective markets.
The NGX side, it is incredibly rigorous. To get listed there, a company has to prove multi-year profitability. They need a minimum share capital, audited financials, the whole shebang. That process takes months. But contrast that with the NASDAQ OTC side, which is much more accessible. They admit basically any SEC-registered public company that isn't already trading on another exchange. Because it's a simpler process, it naturally becomes a home for early-stage companies, businesses doing financial restructuring, or even formerly NGX-listed companies that got delisted.
Section 3, liquidity and price movements. Let's connect these market mechanics to your reality as an investor who actually wants to, buy and sell.
And this brilliantly illustrates the day-to-day trading reality. On the NGX, daily volume is in the billions of naira. You've got high liquidity, especially for those large caps. You can jump in and out pretty easily. But on the NASD OTC, volume is much lower. Trading is infrequent. You might not always find a ready buyer or seller at your exact price. And that is a massive difference in how the market actually feels.
Let's look at price movements for a second. On the NGX, the market operates with a strict 10% price band. So a stock can only move a maximum of 10% up or 10% down in a single trading session. It keeps things a bit more predictable.
But if you switch over to the NASDAQ OTC, that band widens out to 15% per session. That wider band is a direct reflection of the higher volatility potential over there. Fewer trades, smaller companies, it just means prices have the room to swing a lot more dramatically in a single day.
Section 4, transparency and risk profiles. Honestly, understanding that volatility is a perfect transition into evaluating the risks inherent in both markets. I mean, information is everything in investing, right? Look at the NGX. Stringent disclosures, mandatory quarterly results, AGMs, these companies are intensely researched. But on NASDAQ OTC, the disclosures are just less demanding, which means there's simply less publicly available info to base your decisions on. If you're someone who relies heavily on research, this stark contrast is an absolutely crucial consideration.
So, let's actually break down the specific risks of that OTC market. Lower liquidity, that naturally means wider bid-ask spreads, which might make exiting a position a bit of a headache. The less stringent disclosure creates information asymmetry. Some folks just might know more about a company than the public does. Plus, these smaller companies inherently carry a higher business risk. But to be totally objective here, higher risk can sometimes translate to higher potential reward. Early investors who spot undervalued opportunities here have historically seen some exceptional returns.
Section 5, which fits your strategy? With all of this data laid out, how do we actually apply these mechanics to your personal portfolio?
So the crucial point is this. The NGX is really your foundation. If you want high liquidity, quick exits, and well-researched companies, you belong on the NGX. It's perfectly designed for building a long-term core portfolio of established businesses where transparency is high.
On the flip side, you might want to look at the NASD OTC if you're an experienced investor who is genuinely comfortable with higher risk. You absolutely have to be willing to do your own thorough due diligence because the market isn't going to hand it to you. If you're seeking opportunities outside the mainstream, and if you have a longer horizon and can tolerate that illiquidity, it's a fascinating space. Actually, a lot of experienced investors use a hybrid approach, keeping their safe core portfolio on the NGX while taking a few higher-risk satellite positions on the NASD OTC.
Now, to execute any of this, you need the right tools. Thankfully, you can track both the NGX and the NASD OTC simultaneously using a free tool like NGX Pulse. It gives you unified, live prices, heat maps, and corporate disclosures all in one place. And hey, if your strategy goes beyond Nigeria, the source material mentions Mansa Markets as a great unified terminal for tracking 13 different African exchanges.
So we've broken down the rules, the risks, and the potential rewards of Nigeria's two distinct stock markets. And I just want to leave you with this final thought. Take a hard look at your own strategy. Is your portfolio ready to explore the less charted, higher-risk frontier of the OTC market, or does your investment journey demand the transparency and safety of the main board? There's no wrong answer here, but knowing exactly how these two markets function is the only way you can decide. Thanks so much for joining me for this explainer. Keep learning and keep exploring the mechanics of the market.